Good morning, members. Welcome to this mid-month update for Thursday, August 20. And the main theme through this, as it is through most of the things that we do, but particularly at the moment, is looking forward, how should you be positioned? Because there is a lot of change in the market, there is a lot of volatility, and so positioning and weightings are absolutely critical. They're as important as the stocks that you select and the prices that you enter at. And whilst we don't want to make too much activity out of this, I see the way that members should operate as not making big moves, but just nudging your weightings around as things change. Now, obviously, gold, and I'll be covering that a little bit this morning. It wasn't my intention, but the move overnight and followed through in Australia today is so dramatic that I just need to touch on that briefly. But there's been a huge amount of activity, and we've been trying very diligently, and I think reasonably successfully, to stay on top of it because we've just got much better tools these days. The AI tools that Justin has developed are really giving us information that gives us a lot more confidence about what we're doing. But nevertheless, the volatility, particularly in AI stocks, is still, you have to say, pretty extreme. The deleveraging of memory stocks that we thought was done a couple of weeks ago, it would appear is not as done as we thought it was, or, and this is perhaps more likely, the leverage just built up again really, really quickly. So we've always got that in the back of our mind as far as members go. So let's jump into it. There's the glossy information, and a reminder, this is general advice only. So where we're going with this is that the market has shifted. We've been in this transition where there's been question marks over technology. There are still a few, but we're still very bullish on technology in the longer term. But certainly other sectors can come into it quite strongly, such as precious metals, for instance. So just going to be having a look at what is normal, because having accurate expectations about what the market is probably going to do, not will do, but just working the odds, what's the market most likely to do, what's it done in the past as a guide, and therefore what is probable for the future, because that obviously helps us with not only our positioning, but also our weightings as well. So we'll have a bit of a look at that. Critically, how to best position for the next 3 to 6 months. Now, we're not trying to read a crystal ball here. We're just working with the odds. One example, we've been expecting a confirmed reversal in gold. We got something that looked along those lines that I moved on a couple of weeks ago that is now being reinforced yet again. So it's looking at what is likely to be more in favour in the next 3 to 6 months. And we'll be looking across both countries, of course. And then also just a few comments about the new reports and the content and how we intend to use it, how you could use it, and really just getting more of the right type of perspective. And as we've been highlighting in the last week or so, the early warning monitors, which they're really producing the sort of results that are very pleasing because they're giving us confidence that we're not going to get blindsided. Things can always happen in the market, but if you can avoid being disastrously blindsided, then you're a long way in front of most people, because that's what happens to most investors. Something comes up that they're not thinking about or expecting, and they just get blindsided. Again, just we've got a few new members and maybe some members that are more established that haven't really quite got their feet under the desk yet. So just the broad process again, just it's perspective. And the more we can give you a clear and accurate perspective, then the better you will execute. So that is where we're going. And we also had a member question from member George, and it's really about staying on top of all the massive information and all of the changes in the market. So I'll deal with those couple of things first. So just to dive very quickly through the special share process, and apologies to those that have heard this 20,000 times, but there are new members that I think will benefit from this coverage again. So you need a simple plan. It has to be simple because you just won't execute when the pot's bubbling. Things are moving quickly, and it's just these simple questions. What sort of return do you want per annum average? How many stocks do you want to manage? Assign sector weightings across 5, 6 or 7 mega trends. And then, of course, you then look in the open positions tables and plug each of those into their relative sectors. And there's enough information there for you to be able to do that, I think. And if you're a bit short somewhere, you can always just ask the question. The deliverables that we put out, there's the daily alerts, Monday to Friday. There's the Friday videos. There are the mid-month updates. Then we're just in the process of adding the research stock reports and doing them in a couple of formats. A full format that's got a lot of information, many pages for the members that want to deep dive. And also a more condensed version of 2 or 3 pages, which is sufficient for you to make an investment decision, but just doesn't have all the detail. I guess you have to trust that we have vetted all the detail, and I'm comfortable with the recommendation. Now, I need to stress that these research reports and the additional resources that we're bringing to bear here are optional. You don't have to read these. They're not mandatory for your investment success. They're additional information to give you more to work with if that's how you operate, but at the very least, to give you confidence just how much depth we put into the research and the fact that it is a repeatable process, and therefore the results that we've got in the past, whilst you can never guarantee that they'll repeat, it just adds more meaning to them. So let me just stress that again. Don't feel overwhelmed by all these additional reports because they're optional. But we think they're going to be incredibly valuable to a certain number of members. Now, when it comes to the daily alerts, you can spend either 30 seconds and just look at page 1, which has got new buys, stop losses, and trades in the last 7 days. That's all you need to do. Once you've got your plan and you know what you're looking for, you don't need to do anything else. So if you're really busy, just eyeball that page 1 of the daily alerts. When you've got time and or interest, then you can dive deeper. You can read the commentary, you can look at the open positions tables, you can read the research reports, whatever you want to do. So it's very important to realize that you don't have to do everything that's going to be thrust at you and feel overwhelmed by it, because it's just not necessary. We're doing all the hard yards before you even see the recommendations. And also too, we continue to refine what we do, and our output is more targeted to what members are asking. And hence the research reports, hence the monitors that we've got in place that give us early warning of anything that we need to be aware of. And then of course the other deliverable, which is just so important, is the safety net support. If you're not sure of something or you need to know something, then you just ask via email. Because as I've said many times, it's not possible for me to put out a set of recommendations that suits all members. It's just not even close. So we put out what we assess is suitable for the typical member, if there is such a thing, in the, the very broad spectrum that we've got. And if you are unsure, then you ask, okay? So that's our deliverables. And of course, in the background, now we've got these early warning monitors, and what's happened in the last week has been a pretty good road test, because the market movements have been very abrupt. The movements in the bond markets have been very abrupt, and they're just flicking backwards and forwards. It's not an easy time to read, but we feel comfortable that the information we're getting is keeping us right on the ball But just on that point, members cannot afford to think that we've got everything covered for you because we can't know everybody's situation. So don't think that you don't need to do anything, you don't need to think about anything, because we'll alert you, because we're alerting what we assess as the typical member. That may not be you. All right. So you've got some responsibility in this process to look after your own interests, because you might be at one end of the spectrum, either very risk tolerant or very risk intolerant. So once we've done that, then the next part in the process is buying stocks that suit your plan and your weightings. And if you haven't got those sector weightings and the targets within them, then you need to get them, because otherwise you don't have a reference point for anything that you're doing. There's the research reports if you wish. Managed weightings is required, and we try to give you as much relevant information as we can about managing weightings. But again, we have a massive spectrum of members who are doing different things. So we can only try and strike the middle ground. We advise as market rotations occur. We feel right on top of that, so we're pretty comfortable with that part of the process. And then you follow the exit rules as it applies to you. And we are alerting members who are less volatility tolerant. They're not formal exit recommendations, but we're at least alerting you that this might be a time where you might consider reducing exposure, because it's likely to lead to perhaps some sort of disruption in the market. But it's not actually a formal exit recommendation. And occasionally, we will impose some big picture overrides. We did one in June when all the memory stock leverage unwind happened, because the odds just go against us. The odds were with us for a long period of time, and we did incredibly well out of stocks like Micron and a few other US tech stocks. But then it can turn very, very abruptly, and we're never sure where it'll go, how far it will go, and how long it will go. We're also working towards, or Justin's working in particular, towards a reports repository in the members section. There is a lot more work than you would imagine goes into doing that. So that is a work in progress. That will apply to existing stocks we own, and also for new investments as well. And then the ultimate goal, and we're not really putting a time frame on this, but our ultimate goal in the quest to be as valuable to members as we can possibly be is to provide on-demand research. But how we actually implement that is a huge project. I mean, you might think that it's just you send in a request for a certain stock and we hit a button and out comes a research report. It's that will give you a research report, but it may not necessarily be a very valuable one. There is a lot of reprompting and fine-tuning that goes on depending on what response 1, 2, and 3 is. So it's a huge project to make sure that logistically we can do it. Our time reality is what it is. We've also got a process of regulatory compliance that everything that we put out has to go through. So that's got to be factored in. We also need to factor in protection of our intellectual property, and certainly these AI tools that have been developed come into that category. And also, too, we're mindful from your perspective that we don't impose perceived complexity. We wouldn't deliberately put complexity in there, because we put out what we find is very straightforward. But we've just got to be careful that we don't overwhelm members with information, that we don't make things appear to be too complex. So we're juggling a lot of balls here. So anyway, that is our ultimate goal project. All right, let's jump into the charts. There's a lot to cover here as well, but I'll just start with gold. So this is gold overnight, and you can see we had a sharp move, which was the initial signal on the 5th of August. We then just kind of drifted higher to sideways, and then last night there was another breakout in gold as the 10-year bond yield in America came off from 4.72 down to about 4.64, and that was perceived as good. There's the silver chart, and that was the impact on the US dollar. So the US dollar dropped quite sharply and dropped through this important support through here. So you have to think that we're perhaps heading for under 98 and possibly even down to 96. And this might just be, finally, the unequivocal trigger that gold is going to go on a sustained run like we saw in 2025. And of course, this is the ratio between gold and the S&P index, and that is putting a big smile on my face, I can tell you. So there we go in the gold sector. Oh, and just with respect to the gold royalty companies, because they don't get a lot of conversation these days, because up until, let's say, the 4th of August, 5th of August, it was pretty boring. It was down. But now we've got really strong confirmation from the gold royalty companies as well. Wheaton Precious Metals are still in the portfolio. Some members still have GROY because they've written to me asking questions about it. But gold royalty stocks are still a very valid part of the mix. So you've got gold royalty stocks, you've got gold producers, you've got advanced developers in gold and silver, and then you've got the early stage guys. And then, of course, you've got ETFs if you want to. So you've actually got 5 levels of choice within the precious metal sector. I'll just make a quick point. Don't worry about the stock of the chart. It's not relevant. It's just a chart. It's essential that you start with a weekly when you're looking at a stock for the first time. Look at a weekly chart and have at least 5 years worth of data, because you look at that and that gives you a picture, doesn't it? A picture of consolidation. We're in the bottom half of the consolidation. So, that's a pretty clear picture. And we've got some long tails here that are indicating that buying support is coming in this level around about 32. Now, if you had, however, just started with a daily chart, that is what you'd be looking at. And some people tend to even look at just a month or two. Well, that tells you nothing, does it, compared to the bigger picture. So always start with the bigger picture. Now, just a quick review of the last 3 months, and I've labelled them there, points 1, 2, 3, and 4. So 1 was this period here. So this was the anticipation around what hyperscaler earnings would be, and the AI capex, and the mood was pretty buoyant. Then the semiconductors really kicked in, and the mood became excessively frothy. We then got the oil shock and the uncertainty around what the new Fed chair would do, and the massive leverage unwind from crowded and leveraged trades, and the mood moved very quickly to fragile. And that is down into this trough here. And then we started to get strong Q1 and Q2 results, which was the economic proof. The market didn't always respond positively with good economic proof, and the memory stocks, in particular Micron, certainly displayed that. So we're into then another period of uncertainty where the fundamentals made screaming sense that you'd want to own a stock like Micron growing earnings at hundreds of % per year and trading on a PE of 6. I mean, it looked an absolute no-brainer, but the market had completely different ideas because it was looking forward. But the point here is that when you take a step back, then this can be disturbing volatility. Micron went from 1250 down to 750. That's a big, big move. Yet it's almost certain in the longer term, and I won't hazard a guess what that longer term is, could be months, could be years. But in the longer term, I'm totally confident that MU and a heck of a lot of other stocks in the AI sector will set new highs. and it will continue to trend. So it's good to have that perspective so that you've got a choice. But this is where you just kind of nudge your weightings around. You take a bit of profit off the table if that's your style. And that was what we did initially with MU.